Thank you, everyone, first of all, for joining us on a Saturday morning. Right. So in this presentation, I'm here to, give you an overview on what multi-asset investing actually is and how Sphere goes about, multi-asset investing and what our style is. Right. So without further ado, I'll get started. Yeah, so let's start with what every investor actually wants. So every investor wants to participate in a winning, asset class, right? Whether it can be equity, at some points it can be fixed income, and at some points it can be commodities or global or anything else, right? And all investors want a piece of the winner, right? But just merely picking the winner isn't enough, right? You have to get, your asset allocation right. You have to get the proportions right, right? And that's equally as important as picking the winner, if not, a bit more important, right? Just merely participating in ideas, is not enough, right? There's a huge difference between, a winning position having 1% allocation and a winning position having like a 7 or 8% allocation, right? That'll make a huge difference in your long-term returns potential. So that is one thing. Second thing, every investor has some goal to which they would be working towards, right? Well, it can be, reaching a number with regards to a wealth corpus or your retirement corpus, or it can be something like servicing a goal, right? You want to, build a house, buy a house, you want to buy a car, you want to send your kids abroad for education, right? So again, and all these goals can only be achieved through disciplined, consistent saving and also very prudent capital allocation, right? And finally, investors also want an easy measurement of performance. So if you have investments all across the place, right, this becomes difficult, right? How will you track performance in like 7 different places and consolidate it to, like a single number, right? So having an easy measurement of performance is, again, important, and it'll be much easier if you have all your investments in one place. Right. So over the last 12 to 13 years, right, we found that multi-asset investing can actually give you asymmetric returns. So this means that you get better risk-adjusted returns over the long term, right? The high risk, high return model is something that, will not work on most days, right? And you need to be really, very precise, right, with that sort of model, and it doesn't work for a lot of people. So looking at a product which can provide you with, enhanced risk-adjusted returns, and that will ensure less volatility in troubling times, gives you a better investment experience overall, and gives you better confidence, and it gives you more motivation to invest, right? And that's always good. And this will give you a much better investment experience, right? And when you add to this the sheer diversity of asset classes that we find in the multi-asset space, it gives you more options and enables us to manage risk in a much more effective way. So this is a very interesting chart. So here's how different asset classes have performed annually from 2010 onwards, right? So notice it's very rare that one asset class comes out on top for more than 3 years in a row, right? So if you look at 2017, small caps were the king, right? Like small caps were the top performer, as it is in 2023, like right now as well, right? If you look at 2018 and 2019, they were at the bottom, right? If you take the same example, if you look at the GSEC, the top performer in 2016, 2017 was at the bottom, right? And again, if you look at gold, 2018, 2019, 2020, very good performance, right? 2021 at the bottom again. 2022 again on top, right? So this tells us that assets move in cycles, right? And this is the nature of the markets. The markets are cyclical, right? Most investors do not understand this concept and continue to chase past winners, right? Chasing past winners is a crucial mistake that a lot of investors make, right? And the long-term consequences can take a drastic toll on your portfolio on one side, and on you and your confidence as an investor, right, on the other side. So this concept of multi-asset is not a new concept, right? So this chart shows the annual differences. The annual returns of a 60-40 portfolio in the US. So, so in the West, a 60-40 portfolio is really common, or I should rather say was really common before 2021, right? This is a static portfolio with 60% in equity and 40% in fixed income. This means that it will always have 60% in equity and 40% in fixed income, right? But is this actually the right way to go about things right now, right? That's the question we asked ourselves. And we found that in the current macroeconomic scenario, where inflation is sticky, a lot of assets valuations are expensive, right? The broad consensus was that this is not enough, right? And this is exactly why we think going forward, a multi-asset portfolio with equity and debt and some real assets like, commodities like gold, silver, right? Things like these. And a portfolio that can dynamically shift between these asset classes. So the Sphere portfolio is not static, right? It's dynamic. We believe that this was the way to go going forward. Right. So under the PMS model, right, the burden of execution is taken on by us. So this can ensure uniform and timely deployment across all portfolios. And we aim to create a consistent experience for all of our investors, right? We have end-to-end control, and this enables us to maximize efficiency by, being gradual and timely, right, in our investing. So with this model, we can build positions in small increments, right? And this is the key to optimizing cost and also scaling our positions to size. And eventually, these efforts, you can see, will have created superior alpha, right? We'll get to alpha at the end of the presentation. And again, by adding stocks and ETFs to the portfolio, right, and mutual funds, we've managed to reduce the overall cost, and while simultaneously making it superior to other product offerings in the market, right? This product is also, designed in such a way that it's robust and it's scalable as well, right? And this again ensures a consistent experience to all investors, even if you're scaling up to a larger size or you already come in with a large corpus. So again, Sphere is a product that has been refined and perfected for around 12 years, right? And the learnings and constant improvements to our RIA practice, right, have been fundamental for the creation of Sphere, right? The multi-asset concept, right, and performance are not validated by back testing, but we have actually practically implemented the dynamic multi-asset model for quite a while before bringing it to the market, right? And again, Sphere is extremely versatile. where we have no upper or lower limits to any asset class. So if fixed income is attractive, I can even take a 30% position in fixed income, right? Or if fixed income is not attractive, I can go 100% in equities and commodities, or I can go 100% in only equities, right? So we have no upper or lower limits, and this means we have no bottlenecks as such, right? And we can act with full conviction on whenever opportunities present themselves, right? Whether it can be in different sectors, different asset classes, right? Doesn't matter. Like if we have conviction, the product has conviction, right? And in the PMS model, and again in the PMS model, moving between asset classes is much smoother, right? And the process is much more streamlined. So again, it can be done very fast, right? We don't have to, wait in an operational sense, right? In an operational sense, it's also very, very streamlined. So here's one of the ideas that we played in the RA, right? And this is the same sort of investing, principle that Sphere also follows. And broadly, I thought as a house follows, right? And this is contrarian investing. So with Sphere, we follow a contrarian way of investing, and broadly put, this means that we create positions in assets which are out of favor, right? We slowly build these positions to a certain level, right? And we stay invested when the asset comes into favor, and and when the asset starts getting crowded, we unwind our position and we exit the asset, right? So again, we started building our position in pharma in 2017, and we continued it through 2018 and 2019. So this was a time period where the sector was plagued by various troubles, right? And this included the FDA interventions, the US, Food and Drug Administration. And there was huge negative sentiment. But since pharma was a defensive sector, this capped our downside risks, right? So we built a sizable position of 20 to 25%, right? And our initial hypothesis was that it would take longer to play out than it actually did. But then COVID hit in 2020, and the pharma sector just took off, right? And this gave us an opportunity to exit. So we were fully out of the asset class by mid 2021. So we were fully out of the pharma sector by 2021. So it was 2017 to 2021. It was that sort of a journey, right? And from that point onward, the market had moved on, right? By the time we were fully out, we exited in tranches, but by the time we were fully out in 2021, the market had moved on, and the pharma sector was stagnant for a while, right? So over our investment period, right, the pharma sector gave us an annualized return of around 15%, right? And that was an outperformance of 3% on a CAGR basis over the Nifty. So here's an example of how Sphere goes the extra mile, right? So there are two ways, right, in which most investors and advisors, when they want to play an asset class like gold, will implement the idea, right? So number one, and this is the most common, is the easy route, right? You buy a physical gold ETF, right? Or a mutual fund that tracks the price of physical gold, which is again the ETF converted to a mutual fund, right? And this is not a bad strategy, right? When you want to play the asset class, this is the most direct strategy through which you can play the asset class. But this is not going to give you, anything outsized, right? So So at ithought, right, with Sphere, we, in addition to the physical gold ETF, we also invest in gold mining funds, right? These are international funds that track gold mining companies, or and we also invest in silver as leverage on the price of gold, right? So this again, we are going the extra mile to ensure that we're doing the best possible sort of investing strategy to maximize our position and also our performance from the asset. Right. So this is Sphere's universe, right? We have over 1,000 mutual funds to choose from, over 200 ETFs to choose from, and over 500 stocks and around 500 stocks to choose from, right? So again, the work that goes into this, we filter all of these into 30 securities, right? So again, there's a lot of options for you as an individual investor, and it could be difficult for a lot of individual investors to, figure out what the right move is in the market at that point, right? So we take care of that part. We see what the best places to invest in, given the given the sector, given the asset class, and given the time in the market, right? And we decide from whether going for a mutual fund or an ETF on one hand, or going to an individual security on the other hand. Right. So with Sphere, what do we aim to do? We aim to create wealth in a sustainable way, right? And as a multi-asset product, prudent capital allocation can, help Sphere weather through tough market conditions, right? And we also aim to create a versatile investment portfolio, right? And we again, as I've said, we bring equity, fixed income, gold, and silver all in one place, right? Through asset classes like stocks, mutual funds, and ETFs, right? And we dynamically move between these based on what the economic scenario is, how the structure of the mutual fund or the ETF is, right? And we align the portfolio to what your goals are. So again, every investor can have a successful investment journey, right? It's not that only you need crores and crores of capital to be a successful investor. It's not like that, right? Every investor can be successful, but there are a few important qualities on how they can be successful, right? So let's go through that for a bit. The most important quality for an investor is patience. Right? Give your investments time to play out, right? Think of investing as sowing seeds, right? You need to give time for your crops to harvest, right? And the next one is you need to be at the right asset class at the right time. What worked yesterday cannot work today, and what works today cannot work tomorrow, right? So again, you have to keep in mind that assets are cyclical in nature, right? And we need to respect that as well. Engaging with new opportunities, right? Engaging with new opportunities and scaling up existing opportunities is, again, one of the most important factors. So if you add 2% to a position, right, in the bottom of a market or a theme or a stock, right, or a 5% position in a new theme, right? These two factors can make all the difference when it comes to long-term compounding, right? Like how we went to pharma, right? We built positions over, 3 years nearly, right? So again, scaling up of your position, consistently, right? It can help you create a larger corpus on the one hand and participate in great investment ideas on the other hand, and also optimize the cost of your existing investments, right? You can also explore aligning your investments to a target, right? When you work towards something, you are obviously when you work towards something, you're better focused on the end goal, right? When you work towards a goal, that gives you more focus on the end goal, right? And investing works best with a better focus on what your goals are. So who is Sphere for? Right? It's for a systematic investor who wants to regularly contribute to the portfolio, right? It can be every month or every quarter, right? It can be for a dynamic investor who wants to make, investments when there is opportunity, right? And it can also be for a goal-oriented investor who invests with a target. Right. So this is just a brief on the performance. So when we first came out with a multi-asset model, we were there was a lot of backlash, right, from a wide range of people, right? We were told that the multi-asset model cannot garner superior returns, right? And that was the main backlash, apart from the effort that goes in. Right. Basically, the risk wasn't worth the reward, is what a lot of people thought. But we have proved them otherwise. So if you see for Sphere, if we take like the 1 year number, right? Sphere's done 25%, whereas your Nifty 50 and the Nifty 500 are the broad market indices, and they've done 11.2% and 12.8% respectively. Now the NSE Multi Asset Index 1. This is our benchmark. It's been mandated by SEBI, right? So again, we've outperformed the benchmark. The benchmark has done close to 7.9%. And if you see across the board, right, on most bases, we have, outperformed the benchmark and outperformed the broad market indices as well, right? And if you take your attention to the right, this pie chart is where we are on the portfolio as of 31st August, right, which was a couple of weeks back. So equity stands at 77%, right? We have a few global investments that stands at around 8%, right? We have 3% in fixed income. We have 10% in precious metals, and we have 3% in cash, right? Which is not that high. So we are almost fully invested on our overall portfolio scale. For new investors, we're investing close to around 65-70% in the market initially, right? And then scaling that further. Right. So these are a few recognitions that we got. We were one of the best performing PMS funds for the for last year, right, for 2022. And these are just a few clippings that we thought we would take into the presentation. With that, I conclude my presentation. So if anyone has any questions, please put it on the chat, and I can start. Okay. Okay. So how does this product compare with a multi-asset mutual fund? Okay, that's a great question. I'm not sure about the returns right now. I can probably give you that offline, right? I've showed you the returns for Sphere. I'm not sure how much the mutual funds have done. But broadly, most multi-asset mutual funds, if you see, are static, right? Whereas this product is dynamic. So again, this is based on our investment strategy, right? So this is based on how we think the market is moving, right? That's how we would dynamically, allocate funds to the product. But if there are any further questions in comparison to like returns based on the mutual fund, I can take that offline. I will have your details as you've registered for the webinar. So I'll have myself or one of my team members get in touch with you. Okay, so we have a few questions on how to join Sphere, what the minimum SIP is, and on the product structure. Okay, so I'll answer all of these in one piece. So first of all, Sphere is not a mutual fund product. It is a PMS product. It's a portfolio management service. Yes, we do invest in direct stocks as well, right? Most of our portfolio is invested in direct stocks, right? So that is the thing. With regards to minimum investment, the minimum investment for any PMS product as mandated by SEBI is 50 lakhs, right? And for the SIPs, the SIPs can be for any amount, provided the initial investment is there at 50 lakhs. So that is one thing. Okay, pharma position should be attributed to COVID rather than anything else. If there is some other factors that can give a good return in pharma other than COVID reasons, please explain. Okay, so when we started investing in pharma, sir, it was at the bottom of the cycle, right? So we spotted an asset, right, which was at a cyclical bottom where no one wanted to invest in, right, at that point. And we started building positions in that asset class. So we didn't go from 0 to 25 straight away, right? It was over a period of 3 years, right? And a part of the pharma positions success, or I wouldn't even say that, I would say the pace of the success, right? That was affected by COVID. So we had an initial, like a 5 or 6 year view for our exit strategy, right? So there were a lot of factors that that affected the pharma space, right? It was the companies moving from one strategy to another, the US FDA interventions, right? There were a lot of factors. For all of these factors to play out and, for the company's outlook to grow more positive, right? We expected that it would take 5 to 6 years, but COVID accelerated that performance, right? It was not that we didn't have any out apart from COVID. Right, we had a lot of choices. Right, we had it was a different sort of it was a different idea that we had that would give the pharma position a successful exit. But again, it was COVID that actually pushed us to exit pharma really soon because at that point like the prices had moved up too much, and it wasn't we weren't comfortable being in that space at that sort of valuation, right? So it was merely a case of valuations moving up too much too fast, right? That was one of the biggest driving factors of us in our pharma exit. But we did have other ideas that that would have given us an exit, even if not for COVID. Okay, is 50 lakhs enough or is further required? Okay, so for starting the PMS, for starting the account, for us to start investing in your account, 50 lakhs is enough, right? But we always encourage investors to scale up further, right? Because that's how actual wealth creation happens, right? Actual wealth creation happens through when your investing is consistent, right? And when you can invest more based on what the market opportunities are, right? If I'm fully invested in your portfolio and then we find 2 or 3 new opportunities, right? I can't sacrifice the existing position unless it's played out, right? So if the idea is fully played out, then we can move that position to a new position. But unless that position has played out, I will not be able to add more positions, invest more aggressively, right? So again, at that point, we always encourage investors to scale up a bit further. It need not be 50 lakhs in every tranche. That is near impossible for a lot of people. But again, a 2%, a 3%, a 5 or a 10% addition is very appreciated at at points in time where we have a lot of ideas to start playing through. Can we invest jointly with family members? So it's an individual's account, but again, I would ask you to reach out to us further to explore more questions regarding like the operational processes. I believe Gopinath had put our email ID in the chat. So yeah, you can reach out to that email ID and our team will reach out. Okay, the service. Okay, the fees for managing the product is 1.5% flat, and it's 1.5% with GST, or rather GST is extra, and that is every year. It's charged quarterly, so 1.5 by 4 every quarter, but 1.5% annualized every year on the portfolio's value. Okay, in this market situation, will this method work or will we need to wait? So markets are at a high, you are correct. But again, that is the broad indices, right? There are a lot of ideas in different spaces and in different stocks and in fixed income as well that we can explore, right? So if you see our portfolio, right, we are almost fully invested, and we are still very, very, very comfortable with the positions we've built. We're seeing a lot of room for these these stocks, these asset classes, and the sectors we've invested in to outperform the market, give us satisfactory returns, right, over the next few years, right? So again, the indices are at a high, right? But there are a lot of very interesting, very promising opportunities that are there in the market and that we have invested in, right? So there is not a need to wait if you know what you're doing. Okay, so ICICI's multi-asset fund, yes, and other multi-asset NFOs are lined up. How does Sphere differ from it? Okay, so the multi-asset space on the mutual fund side, right, they broadly invest in funds of funds, right? They don't invest in individual stocks. Yes, they might go to a thematic or like a fixed income thematic as well. If you take a look at floating interest, if you take a look at the GSECs, right? But we are different in that we invest in individual securities, mutual funds, and equity as well, right? That is one way where we differ, and also we differ in the fact that we're dynamic, right? There's actual work that goes into every investor's portfolio, right? Tracking position sizes, right? All of that work that goes through, you get a very sort of personalized and a better investment experience overall, rather than just investing in a fund that allocates based on a model, right? And that's another thing that's different about Sphere, is that we don't have a model portfolio, right? So what I'm doing today may not be the same thing that I'm doing 3 months from now, right? It can be very different based on how the ideas play out or how the market moves, right? So all of those factors are present in a PMS, right, rather than a mutual fund. How does Sphere invest in global stocks? We invest in the global space through ETFs. And rarely through mutual funds, right? Like, we don't prefer mutual funds, but again, if we have no option and that idea is something that we really want to play, then we go to mutual funds. Otherwise, it's mostly through ETFs. That is for the global side. Does the multi-asset include multiple sectors in equity in addition to MF? Yes. With equity, we can play multiple sectors through the stocks themselves, right? So if you want any examples, we have investments in financial services, we have investments in auto ancillaries, right? We are invested in various different sectors through the stock position itself. We don't necessarily need to go to mutual funds to do sectoral investing here. Okay, what CAGR can be expected after expenses and charges on a 7 to 10 year basis? Okay, so 7 to 10 years is a very, very long time. But for a product like this, which, where safety of capital is one of the most important aspects, right? Where we aim to build, your portfolio consistently, right, through a large time period. I feel that 12 to 15% can be pretty doable. Shouldn't be that big of a problem. Yeah. So I've put our contact details on the slide presentation, right? So again, for anyone who wants to get in touch, they can use the email ID and the phone number, right? Yeah. So that's that. If anybody has any more questions, please put it on the chat. Contact. So the contact details are not only for Sphere. The contact details is for ithought as a whole. But and again, it's not only for this session. So you can contact the email ID and the phone number anytime. Okay, so if there are no further questions, we can close the presentation. Thanks a lot for joining us, everyone. Again, if you're interested in the product, or if you have any questions later, which is natural, right? Please feel free to reach out to us. We'd be happy to assist. Thank you.